Good morning all and welcome to this morning's video. So I have two pairs on watch today and those are pound dollar and Kiwi dollar. So I'm going to break down my favorite of the bunch, which is pound dollar. And I'm going to start off with the weekly chart as always. So the reason I'm looking at this pair is because on the higher time frames, so the narrative as I see it is that we have this 1, 2, 3 touch structure there. Okay, equal spacing between the touches more or less. We have this middle section here. Okay, we break below. This is what typically represents a bargain area of value for a buy for the big investors, the bigger players. If we look left, there's no liquidity points below there. So historically, these areas represent a high area of value for a buy. You can see here where people thought it was a retest to get short. But as I always say, if it is a retest to get short, where is it going to? Because we don't normally see a sharp move up and then price just suddenly plummet to the downside. Usually the market moves in the form of impulses and corrections. So it will move up. We'll get an impulse up, a correction, and then we'll move to the upside. Impulse, correction, continuation. And that's exactly what we got. And one of the reasons we're likely to continue to the upside in the long term is because we have a near miss up here, which at some point will likely get taken out. We have this near miss to this high here, and typically speaking, these tend to get filled, although not straight away, especially as we're looking at this on the weekly chart. So the story as it is to me is that we don't need to come back down to here at the moment because we've washed out all of the liquidity that was there. We then have this impulse correction continuation to the upside. We don't necessarily need to come all the way down to here at this moment in time, although it is a point of interest that we do have a bit of a near miss here to this low. So maybe at some point we will take that out. What it's looking like to me at this moment in time, because we kind of impulsed up from that area, it's looking to me like, if we just measure that this is an impulse correction continuation to push higher to take out this high, or potentially even this high, because if we just look at this, if we try that again, we have a near miss here to an exchange of liquidity, which caused a very, very aggressive sell-off last time around. Okay, so what this may be an impulse correction continuation to push higher to take out this high, which this high near miss to, because then we would have an impulse and a continuation leg, which are of a similar length, which is typically what we see, and that would leave us with this 1, 2, 3 touch structure there. Okay, we would have to kind of connect it from here for it to be equal, but we would certainly have that 1, 2, 3. Okay, and maybe this is the 1, 2, 3, which comes up to there to take out this high, which this high near miss to. Okay, but for that to happen, what typically needs to happen is we tend to need to take out lows such as this, which this low near miss to. Okay, so I'm just seeing this at this moment in time as an impulse correction to continuation to push lower to take out this low, which this low near miss to, before this move, and then that would give us that impulse correction continuation. Okay, so there's context to all of this. Okay, I'm not just randomly putting pairs together. I'm actually factoring in what I'm seeing, and you can see that last week we had this solid impulse down, or that wasn't last week actually. We had a bit of after this solid impulse down, we have this kind of candle, and typically speaking, when we have these green candles with a big wick above them, typically the wicks need to be filled before we continue lower, and that looks like what's happening at the moment. If we just drill down, you can see we have these impulse correction continuations, bit of a scoop here, bit of a steep pullback, but you can see here that we have this near miss to this wick, which will be clearer on the lower time frames. What happens? We take out the near miss to the high, break just above, and then push to the downside. And I'm just seeing this now as a potential, this is not confirmed, but a premature evening star formation for a move to the downside to take out this low and this low, which you can see this low near miss to here, this low near miss to here. So these will likely be taken out, and price will likely find its way down to the here before that moves to the upside. So potential premature evening star formation there. If we just analyze the structure, so I'm asking myself, am I well positioned on the higher time frames for a move to the downside? Well, yes. Am I well positioned for a move to the downside on the lower time frames? Well, yes, because we are now, you can see here, there was a reduced risk entry here, but that would have gone during the night. As I said, I'm thinking long term of changing my trading during the Asian session, because I've noticed that 80-90% of my entries shape up during the Asian session, and one of the reasons for that is because we're not getting all these crazy news announcements during the Asian session that you typically get during the day, which typically invalidate a lot of the entries that I'm actually looking for. They don't tend to change the direction. They just create a lot of whipsaw, which just invalidates the structure a lot of the time. So I am considering long-term changing my trading session to the Asian session. I found even before I traded this strategy that the majority of my entries would shape up during the Asian session. So that is a point of interest. But then I would have to wreck my sleep schedule. And I've mentioned previously how I used to work night shifts. And, being asleep during the day and awake during the night is not great for your psychology. Okay. So do I want to jeopardize my psychology, which is another topic altogether, because that can affect us as traders as well. But that's another topic for another day. So the next thing I'm asking myself is, am I well positioned on the lower time frames for a move to the downside? Yes, you can see that we've broke above. I talked about this. I may have talked about this, I think. We had a sharp exchange of liquidity, which caused price to smash through this low here, okay, where there was a lot of volume, suggesting that there is likely a lot of volume here. And I suggested, I believe, because I've had this pair on watch for a little while, I suggested that we would likely break. This is where the liquidity was, and sure enough, we tapped just above, and we've plummeted to the downside and moved with a similar level of aggression as we moved there, or we're starting to at least. Okay, this looked like the bit of a FOMO move. Okay, where we get close to it and we don't quite tap it. So I was just seeing this corrective move down, all in all, as people trying to sell this whilst the orders that were still up there were dragging price up. Sure enough, we tap below there, wash that liquidity out, push up to that area, tap all that liquidity, and then move to the downside. So with all of that in mind, what I'll be looking for, so I'm asking myself, is the sequence good? Well, the sequence is, with the exception of this kind of sharp pullback here, the sequence is reliable. We have tight flags into a slightly larger tight flag. Then we have this larger correction, bit of a strange pullback there, but then we have a move down, and this move down, this correction is almost bang on 50% of the length of the preceding impulse. So this is a reliable sequence, even if we just look at how prices responded from this area. We have this little tight correction here, which is more visible on the 15-minute chart, impulse correction, impulse tight correction, and then we have this kind of potentially this third correction. So I'm very satisfied that the sequence is reliable as well. Okay, so what I'll be looking for then, with all of that in mind, is the following. I'll be looking for, because it's kind of the third correction in, and certainly because this was a big drop, this is where corrections can turn into larger versions of themselves. So whereas typically you'd see me looking for an entry like this, the reason that I'll be looking for an entry within the flag, and specifically a 3-touch, is because, one, we're quite far into the move, and also price can turn into a slightly larger version of itself, where it does something like this before it drops. Okay, so the reason I take the risk entry within the flag is because if that happens, it typically allows me to get my risk off the table. So if I was getting involved within a flag such as this, okay, and price broke the low and then started to mess about, and we got something, slightly larger, I would be running at 1% and I would be able to get my risk off the table, versus if I was looking for an entry on the break and that happened, then I would be in drawdown most likely. If price broke the low here and started to mess around, I couldn't really get my risk off the table. Okay, so that's the idea behind the risk entry within the flag. So what I have done is I've set a Google Calendar reminder to remind me to check this in a couple of hours' time. Okay, if we just look at the structure, what might be happening here. I mean, typically speaking, if this was, if this kind of correction was up here, then I would expect this to commit to the downside. But you have to look at whether your entries are proportionate to the move down which has preceded it. So what this like, because the market needs to breathe after a big move. If you think of a runner, uh, the longer a runner runs, the bigger the breath he or she has to take. Okay, so what I'm seeing is potentially this is the high of the flag, and we may get something, something more like that, which has a little bit more depth and a little bit more volume before the move to the downside. But I'm just going to check it. If it just starts to do what's been happening for pretty much a year and a half, is if it just sells off, it doesn't give me an entry, then so be it. I'm not FOMOing in to trades. Okay, I treat trading like a business. I'm a professional. I don't FOMO in like the amateurs do. Okay, that's how you bleed your account. Okay, so the next question I ask myself is this based? If the market was to take me out, why would it do so? Well, why would it do so? Okay, if the market was to take me out of a position like this, okay, with the exception of the fact that it could form a larger version of itself, what is it doing? If the market was to take me out, why would it do so? Well, it's finding liquidity from somewhere else. Okay, well, where? Well, the next liquidity point above price would be up here. So then I ask myself, if price did take me out, let's use this one, what would it look like? Well, it would have to do something like that. And is that normal price action? Is that typical price action that I've seen? And no, it's not. If we've tapped into an area here, a sharp move, and we've broken above this, we've retraced, we've corrected below here, already formed continuation or two continuations, is that typical price action? Is that normal behavior? No, it's not. So therefore, this is a low risk position. Okay. So that's why it's at the top of my list. So Kiwi dollar is a slightly different entity, and you may be able to spot the different entity or one of them already. So on the higher time frames, we have this. You can see that we have this continuation here. Okay, so we have the move down. We have a very wide continuation. We kind of near missed to it. Okay, so already this isn't looking as good as pound dollar. We break above that. We push to the downside, but we have moved since we broke above this consolidation here, which caused a big sell-off, which broke all of these lows. We have moved in sequence. We've had this nice impulse correction, continuation all the way down. Okay, so what I'm seeing this as, and here's another point of interest. Remember me saying we have this, I don't think it's the most significant low, but typically speaking, these lows tend to get broken on the higher time frames if we're going to move to the upside. Okay, and what did we do? We didn't break below it. We equaled to it here. Okay, suggesting that we may need to break the low to move to the upside. Whether that takes us all the way up to there to give us something like this, which would make contextual sense, is another matter. But typically speaking, this just looks to me like a move to the downside to take out this low. Okay, especially as we've now tapped into this high here. Okay, and if we've kind of retested the back end of this consolidation, if you look, this previous daily close broke above here, washed out the orders, which is what I just said happens when we're moving in one direction or the other on the higher time frames. We typically break above if we're going to move to the downside and break below if we're going to move to the upside. We've also retested the back end of all of this volume, and if we just cut that across there, we've retested the back end of this as well. Okay, so that to me looks like a move to the downside. If I just zoom in, you can see one of the reasons this is lower down on my list is because, so you can see we've had some commitment on the 4-hour chart now. We've had an impulse correction continuation. So I'm asking myself, am I well positioned on the higher time frames for a move to the downside? Yes. Am I well positioned on the lower time frames for a move to the downside? Well, yes, at this moment in time. What's the sequence like? Okay, well, if we just look at the sequence, it starts to look nice from kind of this area. Okay, and even here, because the pullbacks from this area are not more than 50% or in that region, when we have this sharp pullback, so when price started to impulse here, we've now pulled back about 70%. So the sequence isn't as good. Okay, that's not typical. And also, just to touch on it, you may have spotted this, we have this sharp move here, which caused price to smash through this low here. Okay, and just to touch on it, cause price to smash through all of this as well. Okay, that suggests to me that there is a lot of liquidity here potentially. So what that means is that I am going to be looking for a position here, but I won't be taking. So that tells me the next question I ask myself is, so this would be my entry today. Okay, I'll be looking for the same thing as with pound dollar. But the question I ask myself is, if the market was to take me out, why would it do so? Okay, well, it would likely do so because it's trying to find liquidity from here, okay, for the reasons just expressed a moment ago. Okay, if price was to take me out, what would it look like? Okay, well, what it might look like is something like this, okay, where we get something like that, and then this becomes the middle section. We then push up to that sharp hook point where the liquidity is sat, and then this gives us something, we get something like that, okay. So the next question I ask myself is, yeah, if the market was to take me out, what would it look? Why would it do so? If it did take me out, what would it look like? And then I ask myself, is this abnormal? Is this out of the ordinary as to what I've seen in the past? And the answer is no. So therefore, this is a higher risk position. So therefore, my rules dictate that unless I'm in profit by 2% for the month, and I'm not at the moment because none of my entries have shaped up, then I would not take this position. So that would mean that pound dollar would have to provide an entry. It would have to put me in profit by 2% for the month for me to be able to take this trade situationally, if that makes sense. And if you haven't figured out by now, this is obviously, if you look at the way that I'm trading, I'm treating if you look at the way that I'm treating trading like a business, not as a casino, as many of the traders who are trading today currently are. So that's what I'm going to be looking for, folks. I've set an alert at the high of this structure here. You can see we're kind of contained within this consolidation. I've set a little alert to see if we come up to here. But again, I'll be looking for a 1 hour flag, which is 6 to 8 corrective 1 hour candles. We don't have that at the moment. When price started to correct, I count it from the first green candle. So 1, 2, 3, 4. Okay, so this would take another couple of hours for it to be ready in any case. But that's what I'm going to be looking for today, folks. I hope you've enjoyed this video. I hope it's provided you with some value. And of course, as I get better at trading and I, blueprint more of the things that I've learned to see in my minds, then I'm sure I'm going to be able to knowledge transfer that to you with a greater and greater level of ease. But thanks for watching, folks. Have a great rest of your day. Have a fantabulous weekend, and I'll see you in the next video, which will likely be made on Monday, providing I have a pair or pairs on watch. Speak to you soon.